watching Business Incorporated live from Channels HQ right here in Lagos. Here's what's coming up. Ethiopia emerges as the most recent African nation to experience a sovereign default as it fails to make a $33 million coupon payment on its only international federal government bond. The Federal Competition and Consumer Protection Commission says it will be developing a new regulatory framework to address Nigeria's rising indebtedness to digital money lenders. And Kenya and the European Union recently signed a long-negotiated trade agreement to increase the flow of goods between the two markets. Hello, welcome to the program. I'm Ladi Williams. Well, it's Boxing Day, time to see what gifts some markets are giving to investors today. That is markets that are open and gauge the sentiment of consumers right here in markets that we track. Well, let's get over to the Middle East now, where most exchanges are open but trading positive right now. Abu Dhabi index up 0.11%. While we see the Dubai index up 0.15%, so we're seeing positive sentiments right there in the UAE. Other markets we track in the Middle East, we see Saudi Arabia up 0.76%, while the Qatari index, that's up 0.1%, 0.50% there. So we're seeing positive sentiments right there in the Middle East. Well, to Europe now, Christmas is done. Time to unbox gifts, and retailers taking stock right there in Europe. Lars Holters, Deutsche Welle, joins us now from Berlin to give us a sense of what's going on there. So, Lars, what are businesses saying? Was it a good holiday shopping season?
Thanks for having me, Ladi. And no, it was not. Here in Germany, retailers are disappointed. Now, it's not entirely surprising because we knew before Christmas that business wasn't as strong as in previous years. But I guess there was still some hope for store owners that people will come in for last-minute shopping. And even that hasn't happened. Now, in absolute numbers, holiday spending was about 1.5% higher than last year, but analysts chalk this up to inflation, higher prices, and if we take that into account, we're looking at a real retail revenue drop of around 5%. That's very disappointing for businesses, although we are dealing with some problems here in Europe that are at least explaining why the consumer hasn't been out there as much as some would have liked to see. Besides those rising prices that we're seeing, we're also dealing with a recession in Germany, we're dealing with weakness in the industrial sector, in real estate. Let's not forget the current budget crisis, with the German government pushing for extra savings of around 60 billion euros. Also, there's obviously these two wars going on in the Middle East, as well as Russia's ongoing war in Ukraine. So there's a few reasons for consumers to be careful with their spending.
All right, what about other countries? Was the holiday shopping season better there?
It was certainly better in the U.S., with Christmas Eve falling on a Sunday. Americans started the weekend with what they called Super Saturday, and analysts are saying that for retailers around the country, this day was the second best shopping day of the year, right after Black Friday just about a month ago. The National Retail Federation estimates that about 142 million shoppers were out there spending money at stores or online on that one Saturday. That's a sharp increase from the 126 million consumers in 27. That was the last time Super Saturday fell on December 23rd. And there's also a special Christmas treat for retailers in the U.S., well, technically anywhere in the world, but this phenomenon is especially strong in the U.S. I'm talking about gift cards. Americans are spending nearly $30 billion on gift cards this holiday season alone. That, again, is according to the National Retail Federation. Now, while 70% of these gift cards are used within 6 months, many are not used ever. And that is an enormous financial boost for retailers. A recent survey found that 47% of U.S. adults had at least one unspent gift card in some drawer somewhere with an average value of $187. So not for this year, but in general, that's a total of $23 billion that people spend without receiving any goods or services.
What are investors looking at in today's markets?
So with most markets still closed for Christmas, let's look at some general news driving the few that are open. Currencies. We're seeing the dollar weaken a bit, and that's due to the recently cooling U.S. inflation. The greenback is at a 5-month low. It's basically all a bet on the Federal Reserve cutting interest rates early next year. The dollar down, often that means oil is up, and so it is today, but not just because of currency swings, but mostly oil is impacted by those troubles in the Red Sea with Houthi attacks disrupting global shipping. That's a problem we'll probably have to deal with for a while now. As for the rest of this week, tomorrow all financial markets will be open again, and we'll see if there's going to be a little bit of a year-end rally.
Right, definitely looking out for markets as they open tomorrow globally. Let's see if we get that year-end rally. We've all got a Santa rally in some markets. Thank you so much, Lars Holter, right there in Berlin. Let's take it to Asia now. See, Japan and South Korea markets started the last trading week of 2023 on a positive note with the Nikkei 225 all set to emerge as the region's top performer this year. But China stocks, we see they continue to slide. There we see the Nikkei there, 0.16% to close today. The Kospi, that was up 0.12%. We see the HSI index down 1.69%. Other markets we track in Asia, that's the ASX 30. We see that's down marginally 0.03%, while the Shanghai Composite down 0.68%. All right, let's get a check on the crypto market now. Let's see what's happening this afternoon. Earlier, we saw Bitcoin was quite pressured there with the bulls selling off at that 44,300 resistance zone and started a downside correction. Declined below the 43,500 level. If you take a look at Bitcoin there and Ethereum, we'll see Bitcoin, Ethereum, we'll see those markets there red right now. That's the color. We see it's still down. Bitcoin 1.32% down. BNB holding up there 8.47%, while XRP is down about 2.88%. So that's how the market's looking right there in the crypto market. Still seeing sell pressure, maybe some investors taking out some profit to do some last-minute shopping there, preparing for New Year, for the year end as other markets start there. Well, according to data from Digital Magazine, the Black Pro Research, in 2023, venture capitalists injected about $10.7 billion into crypto and blockchain startups, marking a 68% decrease from the $33.3 billion invested in 2022. If we put up that slide there, you see it. Big change, down 67.8%. We just got 10.70 billion. That was one invested in 2023, which picked up in the 6 months to the end of 2023. But we see 2022 was quite strong, $33.3 billion. So let's analyze the reason for this drop now. Joining us now is Gilbert Jopata, financial market analyst. Great to have you, Gilbert. Happy Boxing Day, I guess.
Mr. Ladi.
All right, so in terms of investment distribution by stage, which stages would you say received the majority of funding in 2023, and how does it differ from the investment pattern observed in 2022?
Okay, 2023 had a more interesting outlook on how venture capitalists approach the market. Before now, we've always seen venture capitalists always favor mid-stage companies to later stage companies. But there was a major shift in sentiment as well as strategy. We saw this year venture capitalists favored pre-seed, seed, and pre-series A investment over later stage company. This is actually the beginning of more of a significant trend. And for venture capitalists, I think they're becoming more cautious.
Right, and definitely talking about being cautious. How much of macro issues played into this? Because definitely it was all about rate hikes in 2023. How did all of this impact VCs actually venturing into blockchain and crypto? Do they see it as more risky at this point? Hello, Gilbert. Okay. All right, Gilbert, you might have to unmute. I couldn't hear you there, but I'm looking at, investments in 2023. Definitely in the crypto market. We did see a drop there, 68% down, and definitely we're seeing possibilities of rate cuts, going into 2024. So I'm wondering how that's going to shape VC sentiment going into, that's for coming into the crypto market and blockchain industry. Well, let's see if we can get Gilbert again. Okay, so we're still trying to get Gilbert there, having some audio issues with Gilbert. Definitely the internet at this time, sure. A lot of people are sending messages at this time. But going into 2024, some analysts are optimistic that there might be more funding, coming into the crypto and the blockchain industry. As we're seeing, there's signs of rate cuts, with inflation dropping in the US. We're seeing inflation also dropping in the UK. So maybe the VCs might be more bullish, this time going into the sector. And back here in Nigeria, we see also might be expecting some funding, coming into Nigeria, because we've seen the CBN there talk about letting banks actually carry out crypto transactions and services. But definitely the banks are not allowed to trade or hold crypto. But now they can put out their services for most companies that were excluded earlier this year into 2021. So definitely be looking out for how that plays out. But definitely VC funding compared to 2022. When you look at 2023, it's a big drop, 68%. That's what we're seeing from research right there. So looking out for what deals come in 2024. Well, I will take a quick break now. When we get back, we get a sense of holiday spending in Ghana. That's in a moment. Do stay with us. Welcome back now to our next conversation. Well, most of the top economies in Africa are going through a cost of living crisis in 2023 with elevated inflation, currency struggles. So I get a sense of holiday spending in Ghana this Christmas, with Ghana's consumer inflation slowing to 26.4% year-on-year in November from 35.2% in October. Join us now is Patrick Abankwa, Global Investment Consultant. Great to have you on the show. Compliments of the season.
Thank you for having me on your show.
Fantastic.
Yeah, everything is fine.
Nice. So quite a big drop in inflation rate for Ghana from 35.2% in October to 26.4% in November. Is there less pressure on the average consumer this holidays? Is it reflecting in the stores?
Yeah, I think the decline in the inflation is quite okay and it's quite good, comparing the fact that we started the year 2023 with an inflation of over 54%. Now, looking at where we are now in the region of the 20s, it means that there's some kind of leeway for consumers in the country, even though it's not as it used to be in the past. I still think that is giving consumers a bit of space. But don't forget, this is just a matter of September, October. It means most of the traders have already gone for their goods for the Christmas season somewhere in August. So the full impact of the inflation drop has not been felt that much, but at least it offers some kind of hope as we enter into the year 2024.
At consumer sentiment at this time, are Ghanaian consumers, are they showing any fear to spend this holiday? Looking into 2024, we're already getting some forecasts of more macro issues.
Yeah, undoubtedly, people are a bit scared. They don't know whether this kind of drop is something that is going to be a sustained one. So people are a bit cautious around this time of the year, also because there's some kind of education when it comes to people spending within this season. So even though people are optimistic that things are going to get better, people are also a bit cautious in their spending. People are planning towards the new year, especially when it comes to the month of January. When you look at our scope in Ghana, most people, especially parents, spend so much money in the month of January. So whilst people are spending within this season, people are also very mindful of the fact that, this inflation can spike again in the first quarter of 2024. So whilst you are spending, you also have to keep at the back of your mind that there are some bills that you need to settle as we enter into the 2024. So people are in a mix when it comes to failing. People are being cautious, and at the same time, people are also trying to go with the feeling of the season. But the bottom line is that people are a bit more anxious with this particular year, looking at the fact that we've gone through a lot of challenges in our financial system and even the economy as a whole.
Yeah, definitely. People might be having some flashbacks there of the issues and definitely be trying to hold on, to most of the cash they have at this time. But with inflation dropping in November, will the Apex Bank be slowing rates going into 2024? Are rate cuts on the cards?
I think the Apex Bank usually want to look at the schedule, the period of the inflation drop. So you look at maybe the last 6 months, they look at the trend, and based on the trend that they see, they now begin to look at some rate cuts. And usually they start with the rate cut from inflation by looking at treasury bills. So at the moment, we have average treasury bill in Ghana for the 91 days, that's 90 days, and also the 182 days, which is 6 months, around the region of 27%. If it continues, as we have seen even in December, then you should expect the Apex Bank beginning to drop treasury bill rates in the first quarter of the year, and that will mean that it will also have an impact on inflation and spending in the country. People will now have to look at other avenues to be able to make up money for their investment. So I expect the central bank, or Bank of Ghana, as we say it in Ghana, to drop their rates in the first quarter of next year, because if inflation is dropping, then you should not also be sustaining the high rate of inflation by keeping your rate on treasury bill quite high. And I believe that once they do that, it will also lead to reduction in the policy rate, and eventually it will lead to loans being, more affordable to businesses. And that's where we need, as a country, to boost the economy. And if you want to boost the economy, look at businesses and how much they incur when they go for loan facilities. So I think that's what the central bank or the Apex Bank will be looking at as we go into the year 2024.
Yeah, definitely. All the central bankers now were watching inflation rates like a hawk at this time, looking for any sign that inflation might want to spike again. But let's look at the tourism industry in Ghana. How's it doing this holiday? Is there any influx of tourists, coming into the country? I know Ghana's been marketing, tourism in 2023.
Yeah, when you look at the tourism industry, and especially this year, I think it's an improvement from what we saw last year and also 2021. In 2019, the government set up what they call Coming Back to Ghana. It was a campaign to bring Ghanaians in the diaspora to come home. And when you look at the revenue that we made that year from tourism, it's about almost like $3 billion for that particular year. And that was anticipated to continue in the year 2020. But we all know that the issue of COVID hits not just Ghana, but every country. And that led to our margins that we're getting from tourism going down in 2020 and also 2021. But we realized that from last year coming, it's picking up again. And this year, it has even gotten to another highest level. We look at the number of programs that are happening, even this December. If you look at even the music industry, the creative art industry, more than 15 programs are happening around the country. Even when you look at issues relating to, we have our own lady called Ifua Asantua, who is trying to break the record for the longest some person who is able to sing. And that alone has generated some kind of influx from Ghanaians who are coming down to support her, in addition to other tourist sites that we have in the country. So I think that when it comes to tourism, the country is doing quite well, even though there's still an avenue for us to get more revenue by way of looking at what areas can we market more, what areas can we put so much attention on going to 2024. And for me, if we put so much effort into such areas, then Ghana will be making much money from the issue of tourism going into the year 2024 and even beyond.
Right, definitely. I'll keep tracking the tourism industry right there in Ghana. It's quite impressive what the government is able to do in 2023. Thank you so much for coming on the show, Patrick Barr, Abankwa, Global Investment Consultant. Thank you.
Thank you, Tuesday, for your time.
All right, now let's look at all the stories now. We see Ethiopia has become Africa's third nation to default in 3 years, failing to meet a $33 million payment on its sole international government bond. The country is facing financial strain exacerbated by COVID-19 and a recent civil war officially, declaring to default earlier this month. Although the payment was due on December 11th, a 14-day grace period allowed until Tuesday was invoked. We see bondholders reportedly did not receive the coupon by the end of Friday, December 22nd. Ethiopia's default was widely anticipated. It aligns with Zambia and Ghana in a common framework restructuring. Initial debt relief efforts began in 2021 under the G20-led initiative, with progress delayed by the civil war. Despite a debt service suspension deal with official sector government creditors in November, parallel negotiations with private sector creditors broke down on December 8th, and Ethiopian government officials have not commented on the situation yet. And here we see the Federal Competition and Consumer Protection Commission is set to create a new regulatory framework to address the increasing indebtedness of Nigerians to digital money lenders, or DMLs, popularly known as loan apps. The CEO, Mr. Babatunde Rukere, emphasized the significant industry issue posed by mounting debts to DMLs. While the Commission has successfully mitigated abuse and harassment by these loan apps, Mr. Rukere highlighted the ongoing challenge of Nigerians defaulting on loans, emphasizing the potential consequences, including the risk of collapse for digital lenders that play a crucial role in the economy. And Kenya and the European Union have successfully signed a long-awaited trade agreement aimed at boosting the flow of goods between the two markets. This economic partnership agreement grants Kenya duty-free and quota-free access to the EU. That's its largest export market, while European goods will benefit from progressive tariff reductions, representing the first comprehensive trade deal between the EU and an African nation since 2016. The agreement is a significant step in Brussels' effort to strengthen economic ties with Africa. Kenyan President William Ruto, the signing ceremony attended by European Commission Chief Ursula von der Leyen in Nairobi, emphasized the historic nature of the partnership, aiming to benefit ordinary people by putting real money into their pockets. And the federal government has revealed the means by which it intends to derive the source of deficit funding in the country's 2024 appropriation bill. The Director General of the Budget Office, Mr. Ben Akabweze, was a guest on Business Morning earlier today, highlighted where some of the proceeds for the financing is expected to be generated from. Take a listen.
In terms of the subsidy, a little part of it is projected to come from privatization proceeds, just under 300 billion naira. So the privatization proceeds may come from domestic or foreign investors in the in the enterprises that are going to be privatized. On the other side, which is debt, new borrowings, that's the big part of it. 1.7 trillion naira of that is projected to come from drawdowns on already negotiated multilateral and bilateral, debt, and that's essentially foreign. And then of the balance of just under 8 trillion naira, some of that is projected to come from foreign and some from domestic sources. But the Debt Management Office keeps track of this and keeps watch over the market. And depending on the circumstances of the market, if the circumstances look right to tap the international capital market, they will do so. Otherwise, the bulk of that will come from the domestic capital market.
That was Mr. Ben Akabweze there, DG Budget Office, earlier on Business Morning. Well, that's the show today. You can get more details on www.channelstv.com. Thank you for watching. I'm Ladi Williams. And remember, if you must take profit, find the top.